some of you said you saw us on Grid Saturday. So we're going to be going over something similar to the panel I was on. So how to market deals, right? And a couple different ways to do that. We've been acquiring deals for a number of years, Sunil and I and our team. And so we have a lot of different strategies that we've used to do it. Before we dive into that, just take a look and read our lovely legal disclaimer here. Basically, for everything, in life, it's always good advice. Do your own due diligence. Real estate is no different. So that's basically what that says. Without further ado, I'll let Sunil introduce himself.
Yeah, thanks, Dan. And as always, thanks for putting this together. I think it's been a good run for us for the Grid. We just can't wait to get back to in person. But anyways, my name is Sunil Saxena. As you can see there, I practiced emergency medicine for about 8 years. I'm an entrepreneur. I've started 6 successful companies, mostly real estate related. I've done some non-real estate stuff as well. I've actually been active in the DC market since 2001, so it's my 20th year now. Completed well over 100 projects. It's probably quite a low number now. And like as Dan said, I've done a lot of acquisitions in my career, all the way from small projects to now we're doing bigger stuff. So I think hopefully we can give you some value tonight. And as it says there, I've got 4 amazing children, and my hobbies include tennis, golf, and comedy.
Very funny guy.
Funny looking is what people say.
All right, so this is me. My name is Dan. I've sold $22 million of real estate my first year in the business. That was almost a decade ago now. Wrote a best-selling book about that. I've been involved in a little over 300 homes, closer to 400 now, on the development, financing, sponsor side. I was a Navy nuclear engineer officer. It's hard for me to even say that, let alone imagine how I used to do it. Did that for a number of years. I'm married to Carrie Scholl. We have 4 children, so we got to update that. 4th one came. He's very loud at night, though, so maybe I should just claim 3 for now. And I do ultra marathons and Ironmans, hoping to get back into both of those this year. A little bit about our real estate team. We are the highest selling team in the DMV, #1 in Arlington. We've climbed into close to the top in the nation actually now. Last year we sold over 550 million volume, 670 transactions. We've grown since then, and so our agents do well. They make a lot of money. They have a lot of fun. We do a lot of incentive trips and fun stuff. Even during COVID, we were able to do some pretty cool stuff with the team. So if you're interested, if you're a real estate agent or thinking about it, you can go to carrieschollcareers.com to learn more about that. And I'll let Sunil now go over a little bit of how, just a quick summary. This is a quick summary of what we offer to people that want to invest in real estate but don't want to do it themselves.
Yeah, basically, we've been, Dan and I have been partnering on deals now for a number of years. I've worked with investors even before that, but we have what we think is like a really, really good investment opportunity, especially if you're looking for passive income from real estate. What we're offering is completely passive, truly passive. There's no work on your end. It's not like owning a rental property where people think it's passive, but then there's ended up being a lot of work. There's just, this truly like a perfect passive opportunity. Until prior to January of this year, we were doing it deal by deal. We were raising cash. We're still doing it that way, but now we've launched a fund as well, the Hyperfast Development Fund. That just launched in early January. We've already got a number of people that have taken advantage of that. So basically what we offer in a nutshell is a 15 to 17% annualized preferred return. So that means that essentially you're getting that return every year that we have your money. With the projects, they're 12 to 24 month cycle. With the fund, it's a 7-year fund. 6-year fund, 6 years. So we have your money for 6 years and you get paid annually. So structure's a little bit different, but with the fund, you can also get up to a 17% return if you invest $1 million or more. As it says there, the Class B members of the fund, which are the investors, you guys potentially, are paid before us. We don't make any money until you guys are paid. Of course, the bank has to get paid first, but short of that, our investors get paid first. I don't take any builder's fees. Dan and his team doesn't take any commission to sell the property. As Class A members, Dan and I guarantee the loans. We're actually closing one tomorrow, so we'll be signing loan documents. So we have a lot of skin in the game. It's not just like we're going and sourcing deals and then putting money with deals. We're actually developing these. These are our deals. We're involved with them every day. We do accept IRA funds, which if you're not familiar with self-directed IRAs, please become familiar, because they're very, very powerful tools. We've got a lot of stuff out there about self-directed IRAs you can take a look at as well. And if you're interested in this opportunity, please email Krista at hyperfastdevelopment.com. She's our director of investor relations, and she'd be happy to answer any questions or get you started with our fund here.
All right, that's a very great summary, Sunil. So Sunil, I think you mentioned a little bit about our fund. We also allow investors, and this is up until now has been the primary focus, but allow investors to invest just in one project. So this next deal here that I'm going to talk about is an example of a project that our fund will acquire. It's also one you could invest directly in if you only wanted to be in for like 2 years or less, as opposed to the life cycle of the fund. So this is a property located in the Georgia Ave corridor. It's a freestanding commercial building, and we have the ability to get at least 31 condos. We may do more, we may do less, just depends on our analysis and that. So it's under contract though, we're studying it. This is closest to the Petworth area, very desirable area, a lot of growth. We actually have a project that we started in, was it October we started that one, Sunil, the other Georgia Avenue project?
We purchased it end of October, and I think we started sometime in November, like early December.
Yes, that one will be done sometime late summer probably. And this one is near it and will be a little bit longer. It's a bigger project, so 20 to 24 months. We've got the out sale here, just for one floor plan type. Anyway, this is 6 1-bedrooms, 25 2 bedrooms. Total out sale is about 6.8 on this, if you see there. And reasonable numbers, right? We're talking low 300s for a 1-bedroom, low 400s for 2-bedroom. That's a pretty good deal right now in DC, if anyone's been following what's going on with the market. So here's our sample pro forma. And again, this is like an example of a project that could be in the fund or one you can invest directly in, but the purchase price is just under $3 million. We've got our closing costs in there. Big cost obviously is the rehab, building it, $4 million. Soft cost, investor and loan costs are in there. Total costs are right under $9 million. Total out sale just under $12 million. So big profit margin in this, almost $3 million, 36% return on cost. That's about 11% above our hurdle rate. We target things that are 25% above cost. So that means we've got a decent sized cushion in there, bigger than what we would expect in any type of pullback in the market in DC. So we think we could weather a 2008, 2009 type recession, still make profits, still pay our investors. This is an important thing. As a limited partner, you want to make sure your general partners have skin in the game that we mentioned earlier, but also profit. Right? You don't want to be an investor in a project that has a thin margin. If anything goes wrong, if the sales are a little bit lower, if there's delays, if permitting doesn't yield what you think it should, if anything goes wrong, you've got thin margins, you're investing.
How long will this project take you to do?
Sunil, this is probably 2 years, right? Maybe a little under.
Yeah, 12 to 24 months. That's the one slide had it on there, but 12 to 24 months.
Okay, thank you.
Yeah.
So we'll be raising about 1.8 million in equity. You see that in the bottom right, close to 1.8. Our fund will invest in it, and we'll also have investors in it that invest directly in it. So if you have questions about that, you saw Krista's information earlier, just let us know or pop it in the chat. We'd love to work with you on that or help you learn more. So tonight we're talking about lead generation. We're talking about investing. So I think an important question is, why should we listen to what these guys have to say about that? Well, our real estate team spends over $100,000 a month on marketing. We generate 3,000 to 4,000 leads per month. It used to be 3,000. Since the lockdowns, it's gone up. It's about 4,000. A couple reasons for that. The market's better. Some of our lead sources got cheaper. Facebook has more impressions to sell and that kind of thing. And we've got over 100 units being developed that will close this year, and another couple hundred coming in the years to come. So when we talk about getting leads, finding deals, I think there's two ways to approach this. You can be the tugboat, you can be the lighthouse. Both work. Both are, great depending on what stage in your career you are on. A tugboat, for example, that the tugboat gets the ships safely into harbor by going out, finding them, and pulling them back in. So very effective. It works. Limited though, right? You can only pull in one ship at a time usually. The lighthouse sends out a light. Ships come to it safely into harbor, right? Tugboat is your prospecting. You're knocking on doors. Lighthouse is what we like to call marketing and branding. So prospecting, tugboat strategies. You can knock on doors, you can cold call, you can use letters, pull lists, networking, coming to events like this, going out and meeting people, looking for the leads. We've gotten a lot of great deals this way. You'll notice these things all take your time and they don't take as much money. Where we are with our team, we're able to scale. We have resources, money, systems, people. So we can spend more time on marketing. We can spend more dollars on marketing. We still do prospecting, either Sunil or myself or other agents on our team. And we have deals in our pipeline now that came from door knocking, networking, all of these things right here. So it still works. Marketing. Marketing is the lighthouse strategy. It is getting people to come to you. All right. The traditional way of doing this in our line of business has been signs, print, and direct mail. It still works. And we still do it. We still have signs. We still do direct mail. It's not as efficient though as online marketing. I break online marketing into two types of categories. The first is intent-based marketing. Right? So you run ads where you're bidding on search terms to get people that are intending to be marketed to, intending to find solutions, right? They're Googling things such as sell my house for cash, Washington, D.C., Arlington real estate agent, how to sell my home quickly. They're on YouTube, they're on Google, things like that. So you run ads like this. That's intent-based marketing. Costs more per lead, but very effective. If someone clicks on this, they're probably interested in selling their house. It takes them to a funnel. They're able to sell their home for, enter data if they want to get a quote for their home. And it collects their data, their name, address, phone number, all that good stuff. Disruptive marketing, right? This is what I call marketing. That's the people that are not intending to necessarily sell their home, right? Facebook is a great example of disruptive marketing. People don't go on Facebook typically to find out how to sell their home, right? They go on there for entertainment, connection, taking a break from whatever. So you're popping up in their feed, you're disrupting their activity, right? So this is Facebook, this is Instagram. These are cheaper leads. However, you're often catching them earlier in the cycle. They might be a year out or 9 months out as opposed to a week out or a month out, right? So a lot of people say it's not as effective because they don't have the follow-up systems to stay in touch with them for that long, but they're very effective and they're cheap. We do the same thing. You know, we send them to funnels like this, right? This we call this our hyper fast portal. They can you know, come in here, type a lot of the same stuff, and just get information about what their home might be worth. We also use other lead magnets for this, tips to sell their home or downloads that they have to like trade an email for basically to get, right? So now I can communicate with them, maintain that longer term relationship. This system, by the way, is something that we let other people try out, look at. You can go to hyperfastportal.com and you know, we have ClickFunnels pages you can copy. You can email us, try it out for free, info@hyperfastagent.com, or just go to hyperfastportal.com to check it out. We also have an agent door knocking system. I don't think, is Chris on this call tonight, Chris Clark?
Yes, I am.
No, Chris, not Krista, Chris Clark.
Oh, sorry. Thought you said Krista.
No, so this is a system that Chris has used. You know, so if you want more information about it, you know, if you're an agent and you want to get paid to knock on doors, get referral deals, Chris Clark has a system where you help him generate leads. We can certainly introduce you to him, and you can pick the neighborhood you want to target, and that's how it works. You know, we have the own members of our team do this, so door knocking does still work. This is an example of a door knocking system, and similar to you know how Chris would do it, what we would do. But you know, you're basically going to pull this in neighborhoods, send a direct touch out, knock on the properties on their doors, and then there's going to be a round of cold calling, another direct mail touch, another round of door knocking, and then more cold calling and direct mail. If you notice here, this is one you know system, prospecting, the tugboat system, but I've got 3 different ways of doing it, right? 3 different ways to reach these people: mail, door, phone call. So with all of your marketing lead generation systems, you want to stack, you know, different ways in getting in touch with people. And we'll open the floor up now for questions. And I think that is it. You know, please RSVP for next month's meeting. You used to be able to connect with people in the room. You can do it here though. Everyone can say hello. I'll keep clicking. Just I'll leave this slide up if you want to learn more about our investor podcast and show and the cool things we're doing there.
Mr. Dan, in regards to, I was going to start spending money on PPC campaigns. And what's your thoughts on like Lead Geek or iBuyer or stuff like that? Is there something that you would recommend for investors? I think I saw like a podcast the other day on GeoFlip, and there's one.
Geofencing, yeah. So we have a geofencing platform. So we've done that before. Geofencing is probably not the best place to start. That's a great thing to add on if you're bigger and doing other things.
So like Dan, if an investor has like, let's say $2,000 a month, a limited budget, and he would just like to get, you know, like 1 or 2 leads so he can flip some homes, make a little bit of money. What website or what type of?
Well, you're gonna need more than 1 or 2 leads. So you know you're gonna need like 15, 20, 30 leads, you know, probably to get like one good deal. So you need more than 1 or 2 leads. You want to target seller leads anywhere from like $30 to $300. So if you can get them in that range, you know, that's good, and that'll probably be your blended rate. So Google PPC is certainly something you could do with that kind of budget. I think iBuyer. Are you an agent, by the way?
Yes, I'm licensed in Maryland, Virginia, and DC.
Okay, so that always helps because like let's say you get 15, 20 leads, you've got other places to put them. You can sell them yourself. If it's not a good investor lead, you can refer it out and get a commission. So that always helps when you have more avenues to service these people. It's not everyone that wants to sell their home quickly is a good investor deal.
How about like Lead Geeks? Have you heard of them?
I've not used Lead Geeks. I've heard of iBuyers. We've used them before. We've used Z Buyer before as well.
Is there a platform that you were like I can take action tomorrow and start? Like, is there a person or is there a website, someone that you would say, here, put your money in with these guys in regards to lead generation, and they've been able to produce good results? Just because I own a law firm and I've spent so much money on SEO stuff that just like they overpromise and then like they kill you with managing the PPC campaign. Like it's almost like 1/3 of your budget goes to just managing the PPC.
That seems high. That seems high to me. I would think it would be like 10, more like in the 10 to 15% max. So 30 that's too high, I think. So I would definitely look for a different source. If you're not comfortable, doing Google PPC yourself, I think 10 to 15% is like the max you should pay on managing.
And Mr. Lesniak, what do you think is a good budget? Like, what's something that you could like make a dent? Like, I mean, obviously, if you come in with $500 for PPC, you're wasting your time.
Yeah, no, I think $2,000 to $3,000 a month should be enough. Now you've got to have a good landing page, right? It's the landing page has to match the offer in the ad. You have to have a clear call to action in it, and then a way to capture information, and then a way to follow up with them. So there's 4 or 5 things in your overall funnel that have to be dialed in for it to work. So it's not just about getting them to click. It's what does the funnel and landing page look like, and how good is the follow up?
Just listening, do you actually go on the appointments? Like if you get like a really good lead on a house that you can flip or turn or invest in, do you do it yourself or do you send?
No, we have 80 agents on our real estate team. So a handful of them, probably 5 or 6, focus on development exclusively.
Oh, wow.
So they are doing those types of appointments. I haven't done a listing appointment in
lots of time. Yeah, I get it.
Probably about a year or so. It's been a while.
Like if it was a good lead, you thought maybe you could make like $100,000 or something on it, that you might go yourself just to see what that was like, because maybe you didn't trust the people that you're sending out there to close on it.
No, well, I mean, where we're at now, $100,000 is not like a huge deal for Sunil and me right now.
Wow, that's amazing. That's awesome, Sunil. I hope I can get there one day.
Yeah, I mean, I think like our minimum is probably $500,000, I think, on a deal, and that's kind of on the lower end. I mean, if you saw the numbers on, what we've presented.
Yeah, and that's amazing. Yeah, Georgia Avenue.
So I wouldn't necessarily. I don't know what type of. I mean, there's a deal. I'm trying to think what it would have to be for me to go on a listing appointment. Like, it would probably have to be like 50 units or something for me.
I'll go for a 1-level house in Stafford.
Yeah. You have to. I mean, it's all where you start out, right? I mean, when I was starting out, $50,000 was like a big number for a deal. That's what was my target. So, one of the things I recommend when you're starting out, if you're looking for deals, is really work with agents, because that's obviously you're not spending any money up front. And even Dan's team has a number of agents that kind of specialize in rehabs. I think the last one I did with one of his agents, we sold it early last year, so I bought it probably the year before. And that was like, again, a relatively smaller deal for compared to what we're doing now. The stuff that we're doing, the bigger stuff, you're probably working more with commercial agents and the consultants and things like that that we know. But yeah, I know when I was first starting out, agents were my best source of deals. But you have to, yeah.
Do you have a contractor? I just did 2 flips in DC, and my contractors were not the best. I mean, I saw the feedback because I was a listing agent for them, and man, it was hard to stomach, honestly. Do you have I mean, I know you guys have your own contractors, but do you have like just a residential contractor you recommend?
You're talking about GC or?
Yes.
Yeah, I mean, again, my honest opinion is if you want to be in the rehab game, you can't hire a GC because, again, when you're starting with the smaller projects, there's just not enough profit in there. I mean, even like I do GC deals for other people, like very occasionally, but I would be charging 30, 50 grand probably just to do a GC deal, and that's not going to make sense for like a little rehab. So because it just, for me to get involved, for my time, and then I'd have to bring my resources in as well. So yeah, I think people who try to just say I'm going to buy a property, hire a GC, kind of be hands off, I just don't think it works on those smaller type of deals. And that's especially when you're starting, you got to get to know, you got to be at your job site every day saying, oh, okay, this is how, drywall happens. This is how the studs go up. And you just got to kind of learn, right? I mean, like for me at the bigger deals we do, we have a project manager, but for me to manage him properly, I got to know what he's doing every day. Cause I've already done so many projects when he talks about, oh, we're at this stage, we're at that stage, we're doing this. I'm like, I already know what's going on. So yeah, I think, sorry, I'm being long-winded here, but even if you look at like HGTV and all these shows on TV that make it look so easy, the guys that are doing that are still doing it themselves. They're not typically not hiring a GC and then having someone in between. So yeah, that's my opinion.
I just did like 10. I'm in the process of doing 12 flips since like November, and I try to do that hands-off approach, which I just hired someone who's really good. But the one thing I have found is that they keep coming back for more and more money. And there's never an end. Like there's just never an end. And like you're like, we agreed on a budget, and they're like, well, Mr. Jad, this came up, and then this came up. I'm like, but I could have done the project if that wasn't in the budget. Well, what do you want us to do, Mr. Jad? That's so I've learned a lot, like what not to do, and I've really been humbled flipping homes. I thought it can really humble you. Just like thousands of dollars just keep flying out, and
in general, rehabs don't work when you're having a GC because there's just not a budget for it, right? I mean, if you're trying to, making 50 grand in a rehab is actually pretty good. Even when I started, I thought I was making 50 on every project. I was probably making closer to 20, 25 because my expenses were more than I thought. So if I'm making 25, what competent GC is going to be involved? And like you said, they're gonna always want more money. They're always gonna they don't care about your budget. They typically make more money when you spend more money, so their incentive is to spend more money because they're taking a fee or something. And what you've already experienced, the quality and workmanship is just not going to be there. And nobody cares about your project as much as you do, right?
I mean, the feedback I got, Mr. Lesniak and Mr. Sunil, was like half-hearted attempt at a flip, nice try, leave it for the professionals. Like just the agents were just like brutal. I mean, just killing me with the feedback. We'll offer you 100,000 below what you're asking, and we'll just take it as is and fix it ourselves. Like stuff like that. Like, it will humble you.
Yeah.
It will humble you. Anyways, thank you very much for the presentation, and great job on Saturday. I really enjoyed the grid stuff.
Oh. Yeah, it was a lot of fun always working with Rob.
All right. Any other questions? If not, we will sign off. Let you guys get back to your evenings.
Yeah, we'll hang out for like a minute or so. But yeah, we love your questions. So anything you got, we got a little extra time tonight. Please let us know here.
Hey, how's it going, guys?
Hey,
you want to go open?
Yeah, thanks. Hey, I sent you guys an email I guess I sent an email to Krista to learn about your fund and learn a bit more about you guys.
Okay.
I would love to connect, understand, both from personal investing as well as other opportunities possibly.
All right. Well, we'll make sure Krista connects us with you. So thank you.
Yep, thanks, guys.
Yeah, I just want to get you guys' opinion as to where you guys see the interest rates going at this point. I mean, it looks like they're going back up, right?
I mean, if 3.5 is considered up now.
Well, yeah, I mean, going back to up compared to what it was, because it was pretty.
I don't know.
It's still pretty
if you
low.
can afford the home at 3%, you can afford it at 4%. So.
Right. Yeah. Yeah. I mean,
I don't think they'll go too crazy. Like I don't think they're going above 4%.
Right.
The people in charge want good numbers on their record. So.
Yeah.
They'll sacrifice the future for the now.
Yeah, so I guess you guys don't think the prices of the houses are going to drop at all, and it's kind of.
I don't think it's inflation, and because that's a common thing. I don't think it's inflation or interest rate driven. I think it's undersupply, and this doesn't get talked about much. But last year in the U.S. there were 400,000 houses less than we needed. Like that's rentals and sales, but. That number is, I should just get the slide that shows this, but that number is growing too. There's some projections that say we'll be 1 million short per year by the end of this decade.
Right. Yeah.
The last time we were above was 2005, 6, 7. That's when we had more houses each year than we needed. So
right, and 3 years later you get the crash.
Yeah, so we're not even close to that. I think it's supply and demand driven, not interest rate, not inflation. Even those could become factors though. Yeah,
and I think my take on real estate is real estate is very kind of like very micro driven in terms of like what neighborhood are you building in. So I think people try to make these, interest rates are up or down, or, housing market's up or down. It's like, even in DC, like it's neighborhood by neighborhood. There's certain neighborhoods that are booming right now and other ones that are kind of like flat or even going down a little bit. So I think you got to be more like looking at where you're doing your project or your development or sales or whatever you're doing in real estate. Don't even worry about the state you're in. Don't even worry about the city you're in. Worry about like the neighborhood you're in. That's much more important than overall interest rates and these overall big indicators.
Right. Yeah.
Mm-hmm.
And I think I saw also
people buy because they need you gotta have a house. They need a place to live. I mean, there's investors that are probably more driven by interest rates, but most of the people not like, hey, honey, the rates are 3. Let's go buy a house. They're like, we're gonna have a kid or this. We're getting married.
Well, if you're an investor worried about the interest rate, you're not getting a good enough deal, right?
That's true too. Yeah.
Hey guys, so Upen here again. So yeah, I'm a banker, right? So I kind of, and I'm sure. I mean, Dan, you kind of look at it from the other side of the transaction perspective. So, but yeah, it's like rates. I think we've seen the lows of the rates at least for this cycle. Right, just like we kind of saw a low of 8, 9, 10, they went back up and then we dropped again, right? So I think if you look at it from a cycle perspective, right, another 7 years, 10 years kind of time frame, then we've kind of seen the lows now, right? They are headed up now. How high is an entirely different conversation. Is there's yes, the 10 years headed up. But that's not the only thing that drives rates. There's also demand, secondary market demand, right? Where all these mortgages get bundled up, sliced up, and sold up into MBS, right? Mortgage-backed securities. So what kind of demand is there for those out in the market also drives the mortgage rates, right? And the risk parameters that go into it, yada, yada, right? What the banks are doing. So that for sure right now. So if the rates go up as a flipper, yes, like people are continuing to going to buy, right? It's not like people are going to stop buying, but yes, it could be that somebody who could afford a $300K house today might now be able to afford a $250 because their income didn't go up proportionately, right? So, and rates went from 3% to 4%, that's a freaking 25% jump, right? If you look at it from a net perspective of how much, well, actually 33%, sorry, right? So, but nobody's income is going to go up 33%. So now their purchase, right, their dollar goes as much less.
Yeah, I know, Upin, but the thing is, like, when you look at a market like DC, I mean, your logic makes sense, but the problem is in DC, there's always more demand. So even if you say, well, there's 10 people for one house, okay, then you're going to have 5 people for one house.
Correct. Right. So it's
that's why
like
prices tend not to,
competition.
it doesn't affect prices. That's what I've found in the last 20 years.
And especially what Dan said, right? If right now we got a classic supply demand issue where there's just not enough supply against the demand, right? So you have like 15 offers coming in on one listing, right? So you instead of 15 now you have 7, you have 5.
Right. But you only need one to sell the house.
You just need one to sell. Exactly. Right. Right. But it might taper out the crazy outbidding and jumping over each other, and that part might slow down a bit. But if you got a good property sell, I don't think in our area at least. Other parts of the country, different story, because I do transactions everywhere, so I kind of see things in different. I see very different things in different markets. Yeah, for us, I think it's a slow and steady wins the race kind of some market where we, yes, right now we've kind of had a bit of a bonker town, but for the most part, we are kind of slow and steady, keep going up.
Yeah.
Yeah, and I think too, like, I'll just share like one graph I pulled up here, just to, if you look what happened like 2006, 7, 8. This is housing starts, by the way. So you see it like way up there, and like we haven't come anywhere near that this whole time, and then it
just dropped off.
Then it dropped at the beginning of the pandemic because corporations got scared and like big guys were backing out of deals. You had hard money lenders, like their investors were running to cash. You remember a year ago the stock market went from 30,000 to like 20,000. So
I mean, it's like I had loans, portfolio loans. I mean, which I don't do a whole lot of them. I got an approval on Friday, closing on Monday. They yanked the funding over the weekend because we got shut down.
Yep.
So it was really bad. So right now there's obviously a under supply, and from population growth perspective, especially with our market, right, the population growth in general is going up, and our area is certainly growing and not shrinking.
Yeah, I don't see how it changes, and it's gonna start pricing people out, and it's probably gonna create more of a wealth gap, and it's gonna be a problem. I mean, other countries have this problem a lot worse. Like if you look at some of like the Eastern or Western European and some of the Asian countries.
Well, even our neighbor to the north, Canada. I mean, that's like usually.
So I would encourage people to be on the ownership side of this problem,
right,
as much as you can.
Yep. Now, hey, since it's a smaller, I mean, maybe we can talk when we connect. Is on the fund that you guys are building, is it just simply on the kind of the funding aspects, or is it also to kind of be also from the perspective of building what you said, right? Kind of building a longer term buy and hold kind of a conglomerate kind of a scenario.
We don't have buy and hold stuff in there yet. That would probably be another fund or a second.
Be a separate fund.
Round. And we're exploring and dialing in how and where we'd want to do that. Just with the margins we have in DC and our belief that the DC housing shortage isn't going away. we would rather focus for now on the structure of delivering people 15% preferred returns, and then find a buy and hold strategy that would be as attractive or more that we would, offer to other people.
Gotcha.
Are you guys looking for on the long run to get into apartment buildings?
Potentially, yeah.
Mhm.
Definitely something.
It's more of a steady income, right?
Yeah, it's different profit model there, but or different model, very different model. But we're actively looking right now, so we haven't figured out what exactly makes sense for us. Gotcha.
I see a lot of the buildings that are kind of decrepit and vacant around here in DC. Is that a lot of builders that are just or just investors that are just buying them up and kind of just sitting on them with in DC if you have a permit, you don't have to declare it as vacant, so your taxes go down a bit. Is that a thing that happens often? Or you guys see that often?
I mean, again, that's that neighborhood by neighborhood, right? I mean, you'll see that more in certain parts of DC, because for example, east of the river and southeast, the numbers don't make sense to develop. I mean, we would be developing there if we could make sense. So yeah, a lot of times they're just holding the buildings, but that wave of development in DC keeps pushing east and east. So it's you just got to kind of know what market you're in, what neighborhood, and what's going on there. And if it makes sense to develop, you're going to see everybody and their brother be there. So you're not going to see very many vacant buildings. But if there's areas that just the numbers don't work yet, then yeah, you'll probably see a lot more of that.
Gotcha.
So, all right. Well, any other questions, guys? I think probably going to wrap a little early tonight, right?
Yeah, appreciate you guys.
Yeah.
Okay. Yeah, thanks everybody for joining. We look forward to see you guys in person. I think Maryland just released their restrictions, or they have significantly changed the restrictions just today. They announced it. So I think things are slowly moving towards, we can start getting back in person and things like that. So hopefully soon, a few more months or something like that.
One can only hope. All right, gents. Have a good night.
All right.
Guys.
Thank you, everyone.
Thanks.